I'm just going to start with a prelude to HeavyFinance's story and then switch right over to the actual pitch. I used to work on the other side. I used to work on, I used to work for a bank that invests exclusively in fintechs and marketplace lenders in Europe. And before that, I was working as a placement agent connecting the tier one investment banks with the larger marketplace lenders that had already exceeded that 100 million euro loan book barrier that needs to be overcome, the hurdle. And then when the war in Ukraine started, I live in Germany, and one of the things that I noticed was that you couldn't get cooking oil in the supermarkets. And when you dig into it, when you dig into the supply chain, I think one of your speakers earlier was speaking about that, with the supply chain disruptions. But over a quarter of Europe's food was coming from, well, especially grain, was coming from Ukraine, Belarus, and Russia. And fertilizers also. So what happened was we understood that Europe's food security is in a very perilous place. So I switched over to HeavyFinance. I actually had found them 2 years ago. Can you see my screen? Is it on full screen right now?
Right now, we've just got you.
Yeah.
1,000 pardons. Let me share my screen.
No worries, no worries. I can add a little bit of extra time on there for you.
We may be a fintech, but I'm an old man when it comes to technology, so I'm just...
No worries. You had to go last, so we'll give you some benefits at least. For anyone who's not familiar, after this, we'll go to the startup of the night and decide who wins the ultimate honor. Will it be John? Take it away, John.
Oh, well. Apologies, I'm having a hard time sharing my screen, but let me just tell you the story. The IM is shareable. We have a professional data room and a full investment memorandum for anybody that's interested to review it. Ultimately, coming back to the story, HeavyFinance aims to reduce 1 gigaton of CO2 emissions by 2050. When I joined them, I switched over from the investment banking side because I wanted to help these phenomenal people raise capital. They had already seen some great traction since their inception 2 years ago. They were founded in the midst of the Corona crisis, and since then we've already originated 25 million euros in agricultural loans, 40% of which have already gone towards sustainable farming. And the loan book has performed extremely well, low LTVs, very decent IRRs to investors, and in current times it is a perfect addition to a defensive portfolio because the security packages offer an inflation hedge opportunity. They're rising in value, heavy machinery, crops, farmland. We're originating in 5 countries in the EU. We're currently headquartered in Lithuania, but we are moving it to Dublin because we're launching a dark green fund, an Article 9 compliant fund that will allow LPs to co-invest alongside the European Investment Fund, who takes on half of the position into the fund to finance sustainable agriculture across the 5 countries that we're originating. And I wish I could have updated my computer settings. I had plenty of time to show you some of these images. What we're really addressing is a 30 billion euro funding gap in Europe, where on one hand you have banks who, due to RWA requirements and the general costs that they have to pass down to the borrowers, are in a position where it's not profitable for them to originate loans that are less than 50,000 euros. At the same time, you have 93% of European farmers who own less than 50 hectares of arable land. So this has a very large segment of the European farming community who don't have access to cheap capital or any capital for that matter. So we are looking to capture less than 2% of this market. The total available market is 230 billion euros in Europe, and we're looking to have a loan book of 4 billion euros by 2030. The purposes of loans are varied, but again, the largest segment of our loan book goes towards no-till farming and other farming methods that preserve biodiversity and reduce greenhouse gas emissions. This includes switching over to different kinds of fertilizers and buying new equipment that instead of tractors that do tilling, they do no-tills. So far, we've supported over 750 farmers, and the average loan size is about 33,000 euros, and the average term is 29 months.
30 seconds.
We're launching into 5 additional markets in the EU. We've become cash flow positive. We've raised an additional 3 million just last week from an existing VC. And we have a pretty great competitive advantage over other marketplaces in Europe who either focus exclusively as a white label or focus on the developing world, thus making it not that interesting for institutional investors of Europe, unfortunately. And we're offering a very attractive risk-return profile right now, given current fears of an extended period of deleveraging. We also have a separate carbon farming project where investors can share the proceeds of the sale of carbon credits together with the farmer and with HeavyFinance. ESG is at the heart of HeavyFinance's investment activities. So if you are interested, reach out and I'll be happy to share an IM and a data room with you. 1,000 pardons for my computer.
No worries. It happens. It happens. I like to say technology is great, except when it sucks. Let's bring the other investors in to tear this one apart and see what they think about HeavyFinance. Brian and Jake, I'm going to pull you guys back in there, pull myself back in as well. My quick question while I'm getting everyone back on board would be, why or how do you see yourself competing against folks like Indigo Ag and other players in the ag lending space?
Well, Indigo is they don't only focus on well, they're more of a seed revolutionizing company, if you will. We use quite a bit of the materials that they develop when it comes to carbon sequestration and measuring soil. We don't see them as a competitor. First of all, we focus exclusively in Europe, and they're an American company. Second of all, we see them as a complementary company to what we're doing. When you look at Europe itself, and this was on one of my slides, you have Tarfin, you have AgroCredit, you have Agrify. European fintechs, you have several hundred buy now, pay later products, half of which are probably going to go bankrupt over this coming period. Whereas you have only a handful of lenders that are doing agriculture loans, that are doing ESG-focused agriculture loans, and that are offering both a marketplace as well as a solution for institutional investors. We're completely capable of doing a securitization deal with an investment bank. We're completely, we're currently focusing on launching this Article 9 compliant fund out of Ireland. So we're quite a bit different from what Indigo does. We're still primarily an ag tech that focuses on lending, whereas they have other things that they focus on. I think in one of your emails, Matt, you asked how we're different from Agrify. And if you look at most institutions now based out of London, the investment banks, pension funds, insurance funds, they won't even look east of Poland right now when it comes to investing into debt. So we're focusing on European markets where you can collect quite a lot of data, where you have security packages that can be independently verified, audited, monitored, and the farmers can be held to account. 80% of our portfolio, not only 100% of our portfolio is backed by security packages, but 80% are also backed by personal guarantees of the farmers. and that a personal guarantee from a borrower in Western Europe is different than when you have something from the developing world.
John, just to jump in here, so I'm a bit familiar with this space. Being part of a large institution, Aegon Asset Management, we have a multi-billion-dollar.
By the way, Brian, even you pronounce it incorrectly. The people in the Netherlands pronounce it Aegon.
Yeah, I know. That's right. That's right. I don't want to try and spit on my screen by trying to do that. So the question I have on that, because we have it's in the US, a large ag lending business. How do you, how are you set up? Can you walk me through your origination process? Because it takes a considerable amount of manpower, boots on the ground, those type of things, especially in getting across and having relationships with farmers themselves to look on take on funding. There's an education process, and there's a lot of things, and it takes there's a lot of different elements. How do you get to I don't have the number in front of me, but you said to $1 billion in originations. Like, can you walk through that a little bit?
Sure, Brian. Actually, this was a question that was asked by one of the US asset managers that we were talking to a couple of months ago. We've put together a very detailed data room that answers all of these questions in detail. Happy to share that with you by email after this call. But in short, a large chunk of the decision making of heavy finance is already automated. Now, there are areas where we need to have manual input, and this is mostly related to compliance, KYC, making sure that the farmer is real, making sure that the assets are real and that they're not pledged to other financial institutions, so that we have a first lien claim on the assets. We are also, in terms of our origination capacity, right now we're originating 2 million euros worth of loans every month. Our current capacity in the markets that we are operating in right now is 10 million euros per month in origination. And this is not including new European markets that we want to expand into, like Spain and Hungary and Romania. So if we're able to onboard institutions that can provide us a warehouse facility or that will invest into this fund, then we can actually start matching the demand that we have from credit-worthy farmers that have excellent supply chains who sell their crop immediately. 80% of our borrowers are grain producers, and their crops get bought the moment that they're on the market. This isn't, we've been asked whether we'll take the crop as collateral. It's something that we can do, but not something that we necessarily want to do. We do want to empower our farmers, and there have been moments out of 850 loans that we've originated, there were cases where 6 farmers asked for an extension on the principal repayment, and we provide that. We do see ourselves as a friend to our borrowers, and usually they come complaining to us about local banks, so we're only happy to take their business. But in terms of actual documented capacity to ramp up our originating capacity, this has been very well documented based off of our existing loan book and its growth. So we can easily reach, well, we're anticipating a loan book of 177 million euros by the end of next year, if we don't even sign an institution. If we sign an institution, then we can start originating many more loans and expanding into new markets.
I guess just to add on to that, part of my question was really just on the pure origination, on identifying a farmer, getting them to come on board, not the documentation process, and those things could be automated. It sounds like there's a marketplace and other things there. Is that one of the entry points on getting someone to take on a loan via some interface versus, literally going and having an individual go to a farm, talk to them about what you guys can offer, handshake on a deal to then bring it back?
There have been some interesting things that we've observed over the past 2 years of origination. First of all, the stereotype that people have about farmers that they're not very tech savvy appears to be incorrect. A very large chunk of our farmers came through Facebook ads that we put out, and the conversion of those borrowers was pretty interesting to see the statistics behind it. A lot of our borrower base also comes from word of mouth. A farmer talks to his friend and recommends HeavyFinance. There are a lot of walk-ins, people who just apply through our website. And the sad truth is, currently we're rejecting 94% of loan applications that we receive. So there are more than enough farmers in Europe that we could be serving, that we could be helping. But we only have a retail investor base of about 5,000 people right now, and a couple of institutions that are financing us. We're still a young company, but I think, and we've only been targeting institutional capital since July, and that's why we decided to launch this fund. We're inviting institutions right now to make pledges to enter as LPs into this fund. The minimum size of the fund will be 30 million. And we're looking to launch it March 2023. But the target size will actually be 50 million. So happy to have a follow-up call with you on that.
And in terms of why you could fail, what's the biggest risk that you see in the business now? You've reached cash flow. You've got some funding. What could happen? What could derail you?
What scares me the most right now is that in my efforts talking to institutions, oftentimes you have people who don't even want to talk to you without looking at the asset class. So if we can't secure a sizable institutional commitment and we continue to reject applications from really good farmers, then the business would be dead and we would have failed.
And in terms of the business of the future in your mind is really the fund, and with the marketplace being a secondary model?
No. We're going to stay true to the people that brought us to where we're at right now. It's the retail investors to whom we're eternally grateful for getting us to where we are. We are a profitable company thanks to the loyal retail investor base. I sometimes call them up. The largest chunk of our retail investors are here in Germany. Just chat to them, see what their feedback is. The future of the company is really carbon farming and sustainability. We're a first mover in the Baltics and to a large extent in many parts of Northern Europe with respect to helping farmers switch to no-till farming. And then a process that goes through Vala in the US, where carbon credits are granted against measured results and not predictions, not estimations, but actual measurement in terms of carbon sequestration. And then the proceeds of the sale of carbon credits are shared between the investor, the borrower, and a very small piece of it goes to HeavyFinance. Of this fund that I mentioned earlier, 70% of the expected portfolio is going to be exclusively sustainability focused loans, environmental and sustainability, and the other benefits will be, supporting small farmers, SMEs. We're not talking about large conglomerates. We're talking about cheese producers, wine producers, grain producers that have small hectares of land and have a pretty good supply chain and have been profitable for the past 5 years.